Hello, everybody. Welcome back to the Prospero.ai stock market live streams. The markets are now all in the red today after the FOMC release. So it looks like the markets are not too fond of what they are hearing from Jerome Powell this afternoon. We're going to get into all of the details when George gets in here of the FOMC meeting, what it means for the markets, not just today, but going forward. We're also going to discuss the crowdfund launch that we just announced a couple of days ago, as well as George winning an award for CEO of the Year. So big things happening in the Prospero community. So very cool to see. And then we'll get into the US economy. Some stats came out recently about the growth rates in Q2 and some imports and export numbers. So we'll get into that and what it means for the different stocks that can take advantage or will be feeling the disadvantage of the current flows that are going on through the economy. Imports were down a lot, so stick around. You'll want to hear that number. Exports were declined just a little bit, so not as affected. So we missed our stream on Monday as I was at the beach this past couple of days. But I am back, and we have to catch up on the meme mania that took hold of the markets. The last time we were streaming, a lot of these stocks were ripping, led by Open Door. Let's look at a few of them right now. It looks like with the markets dropping here, meme mania, like whatever round we're in, may officially be over. I see Rocket Companies, which was RKT, was one of them, is now quite red on the day. So Open is actually still in the green, but definitely down from its peaks, and many others that were popping like GoPro and Krispy Kreme, and all of those are off of their highs. So is it officially over in the Prospero signals, mind and eyes and data, or can we see these stocks come back to life one more time? Then we'll get into some of the major earnings this week that we have. So we have a lot of earnings going on, but the four big ones are Meta and Microsoft today, and Apple and Amazon tomorrow. I believe this is the busiest earnings week of this quarter. So a lot of companies. There's some other good ones also today and tomorrow. But obviously the size that Meta, Microsoft, and Apple and Amazon are sure to move the markets just after the bell the coming days. I see a question on YouTube from Saucepot Sassbox. For George, do you think coin is worth holding through the crypto meeting later? Is Meta worth holding through earnings? So we'll cover coin and Meta for you when George gets in here. No problem. Let me just say also, if anybody's watching who's new and has never heard me say it before, we love getting questions, whether you're watching on X or YouTube. So feel free to leave us a comment right now, and we will address all of your concerns, whether it's specifically for one stock or macro or business AI, whatever it has to do with. We are happy to answer it. So leave us some comments. Also, while you're over there, hit the like buttons if you're watching on YouTube or X. I will join you guys and I'll send a like for the stream on YouTube. There we go. I just got us up to 3 on the day. So we hit 20 for the first time ever last stream. Let's see if we can do that again today. It'll be a tough thing to do after we had a little bit of a hiatus, but let's see. A few more topics. So NVIDIA, AMD, SMCI, all rallying. The chip sector has once again led the market. Is it time for these to cool off? These stocks have made tremendous moves. AMD over 100% from the bottom to the top of its April low. Let's see where it was at in like April 4th. April 8th hitting 78 per share, and today at 177 per share. So just a crazy move in a short period of time, just after AMD was seemingly got lost and forgotten amongst all investors. They had like an 18-month period of maybe not quite 18 months, but pretty long, definitely over a year of just lagging behind. So they've gotten their groove back. So has NVIDIA and SMCI. So we'll get into those stocks. Then I created a list of stocks that are at or near 5-year lows. So these stocks include UNH, UPS, Enphase, Lululemon, and General Mills. So I want to ask George on this stream, of those 5 stocks, which does he think will make a new all-time high first? and which would he think will make the new all-time high last. So which is his favorite of the bunch and which is his least favorite of the bunch. We've covered UNH a lot recently because obviously they've made a huge move, and they had some bullish looking signals. But George was always a little bit wary about the company, and I think a lot of people were curious on how they would react this earnings report, and it hasn't been great so far. I think they're in the red since the earnings release, so it'll be interesting to hear if he's ready to buy the dip or still has the same concerns. And a lot of these companies are very different from each other, so they all have different headwinds and tailwinds. So it'll be interesting to see which one is his favorite and his least favorite. And last but not least on the stream today, we will get into CoreWeave. So those who watch the streams and follow our newsletters know that CoreWeave has been one of the worst looking stocks in the signals for a while now. And it is officially at the level or very close to of where George was saying he would just about be ready to take some of his profits at that $100 per share level, currently at 101 right now. So after a long time of looking bearishly in the signals, is it time to take profits? I want to pull it up in Prospero right now to see where it's at. If it still has a zero net option sentiment, because that's where it's been pinned at for so long. Or zero upside. Was it zero net options? Yeah, it was one of the two. Oops. I clicked on CrowdStrike by accident. I was like, why does it have like a 60 net option sentiment? All right, yeah, CoreWeave is still at zero in net options. Interesting though, its upside and downside are coming kind of similar levels. So downside was at the, middle part of July at 94, and it's all the way down to 68 now. And upside is at 56, so almost similar levels there. So it'll be interesting to see what George decides to do. Now that the market is seemingly turning bearish here on the backside of the FOMC, at least for the initial reaction, maybe he will want to continue holding CoreWeave if the market looks like we're going to experience an overall pullback. So I'll be curious to hear what he has to say. Another question on YouTube from Maestro19. What's your thoughts on stocks like XOM, XOM, during an inflationary period at the moment with oil prices up recently too? Would you continue to hold during this period? So once George is in the stream, we'll get to these questions quickly. They'll be the first thing we address here today. I want to check out QQQ and SPY net option sentiment to see if anything is changing after the FOMC meeting. QQQ has been bullish in the bullish range a lot recently. SPY not quite as much, but up off of its earlier levels of the year where it was in single digits for a lot of the year. It's been climbing higher, so let's take a look. Okay, QQQ is at 54 here today, and SPY is at 29. So not a huge shift in the signals right now. SPY did get up over 40 in net option sentiment earlier, towards the end of last week and earlier this week. It was at 43 was the peak, and now it's back down to 29. So I guess a little bit of regression there. Not as low as it was a few weeks ago, though. Let's look at the history for QQQ. QQQ has been pretty range bound between 54 and 60. So it's at the lower end of its range, but hasn't broken out of it one way or the other just yet. Let's see how Bitcoin is reacting today. See if Bitcoin is moving at all with the markets. Okay, so Bitcoin is down 1.8% on the day, and it just crossed below the $116,000 level. Up now, it's back above it, so it's dancing with that right now. It is at the lower end of its range of the past week, but still outperforming. So not too concerned for crypto holders and Bitcoin holders. Let's take a look around the mega cap tech stocks to see what they're doing here. So we have Apple in the red, Amazon in the red, Meta, Microsoft, Tesla, Google. Oh boy, red across the board. Let's check out NVIDIA. NVIDIA is the only one green right now. Jill just said, what just happened to make the stock market dip? A little panic selling? Well, the FOMC meeting is occurring right now. So I'm sure Jerome Powell said something that the market did not quite like. I wasn't able to be listening to that because I was prepping for this stream today, but I would be pretty sure it has something to do with Jerome Powell. Maybe he said that interest rates are going to be higher for longer, or maybe he said the trend of inflation is concerning. If anybody was watching the FOMC meeting right before the stream today and knows what was the key trigger for the market heading down, feel free to share it in the chat, because the rate decision was released at 2 p.m. with no market movement, and then the market started moving when Jerome Powell started talking. So I think it was probably something that he said, or one of the questions he got maybe that he addressed. Oh, just got a text from George. He's going to be a little bit late. So we have to stall just a little bit longer. So if anybody has any questions for me or any thing you want me to talk about that we wouldn't typically talk about before George gets in here, feel free. You want the tea on Prospero, I'll be your guy. Just kidding. But we have a few minutes to stall here. So if anybody has any questions, shoot your shot and I'll address them right now. I'm pulling up the short-term bull list in Prospero to see what stocks are there. All right, right now we have Reddit, Alibaba, Vertiv, Google, UNH, Eli Lilly, Rocket Companies, NVIDIA, and Carvana. An interesting list for the short-term bulls, a mix of some smaller cap or mid-cap. Carvana is crazy. That stock, it's one of the only stocks from what I've seen in people covering it that had a 99% drawdown and then is on the verge of hitting a new all-time high already in just a few years. So crazy to see, and looks like there's more bullishness, at least in the Prospero signals, with an 86 net option sentiment, 88 upside. More to come there. Amazon on the bull list just before its earnings. That's the only one, I believe, of the stocks Apple, Amazon, Meta, what was the other one? Microsoft. Let's check out some of those. So Amazon is on the list. Let's see how Apple's looking, because Apple's been the one that's been lagging the most amongst those companies. All right, so Apple has a 65 net option sentiment. Not great for the mega cap tech where they typically reside, and it was in the 80s just about a week ago, so dropping down from there. Let's look at Microsoft. Microsoft has a 75 net option sentiment, a little bit lower than its maximum of the range. Hello, George. Welcome to the stream today.
Hey, sorry I'm late, everyone. I've been dealing with this very interesting situation that we'll discuss.
No worries. And then I just want to look at the last stock that's going to be of the four mega caps reporting. Meta. Actually, Meta looks maybe the best of the bunch. 97 upside, 95 net option sentiment. But for long-time Prospero users, that's probably no surprise. Meta has looked great in the signal for a long time. But the markets are moving, George. I guess we should start there because, well, it looks like they're actually coming back now. So they didn't initially react off the rate decision of leaving the rates unchanged. But it seems like when Jerome Powell started speaking, they started selling off. So I don't know if he said something particularly concerning to the markets. It looks like, I mean, with them coming back now, it's not too big of a deal. The QQQ is actually just back in the green now. So maybe a little just, algo trading. But we haven't spoken in a week now. So catch everybody up on your view of the market and how you're feeling after the FOMC meeting today. Anything changing in your mindset? And we have big tech earnings to cover too this week. So a lot going on.
Yeah, I'm almost done with this. Yeah. So in my opinion, I would say what is going on here is, especially, with Powell talking, I don't think Powell's very happy with Trump. I mean, he's a very understated person. And the thing about the rates, I think there's very good arguments to be made not to raise rates. The the first and foremost being how healthy the market is, right? There's some things I'd say, especially in the real estate markets, that you could make an argument for. But I think if you're looking at the market as a whole, there's a very good, especially with inflation remaining a little high, as you point out, there's a good argument to be made not to cut rates. But the comment that I found the most interesting, that Powell said, I mean, not only was there there were like little digs, like him being asked about the president's visit and the construction, and he was very complimentary of the president, as any smart person would do. But he said, he made sure to drive home the fact that, these plans had been in place for like 10 years. But the biggest thing that I noticed was when he was asked about, tariffs and that situation settling down and everything. He made a comment that was like, well, you never know when it's like I don't know his exact words, but it was something along the lines of like, well, you never know when that's going to blow up again or what's going on. And like, it could only be so stable. And that to me was the most interesting thing about like, okay, maybe he's got maybe Powell's got an axe to grind with Trump here. And I mean, they are, I think there's, is someone being emotional and letting that take hold of them. And then there's, maybe you do want to get back at someone that's like very clearly publicly wanting you to get fired from your job, right? There's a bit of a natural reaction and a bit of a natural frustration. But yeah, I think that's why the market didn't like it. I think there was a very clear undertone of frustration with, I'd say, especially the president. Now the president affects the market from Powell, in my opinion.
So we got some questions in the YouTube chat before you got in here. We had Saucepot asking about Coin and Meta. Are they both worth holding, even though they both have? So Coin has a crypto meeting that could affect it later on today, and then Meta with earnings this week. And then Maestro was asking about XOM with an inflationary period, oil prices going up. Does that look like a good stock to hold? So Coin, Meta, and ZOM. What are your opinions on the three?
I'm getting an update on Coin. Crypto has been a little bit, it's pulling back a little bit, but maybe the news trigger would be helpful. I actually would lean more towards it being a positive catalyst than a negative one, but it's one of those situations where it's like, let's say I'm 60-40 on positive. I think the 40% has a lot more downside than the positive catalyst has upside, which is why I would lean to not playing it. Meta, I'm probably going to hold through earnings. I have to think on something more. The signals look good, but one thing I've noticed in the past with Meta is there's a very high sensitivity to their CapEx spending, and the amount that they're spending on bringing these people in, getting them in, that's something I'm concerned about. But I would say there's also the AI hype, right? So you could say one side they're spending too much, the other side like, wow, they're making a lot of interesting hires that could work out for them long term. So I'm leaning towards holding just because their earnings have been so positive. But I got to think on that more.
So I did want to bring up some Prospero company specific stories today because, first of all, congratulations, George. You were chosen as the CEO of the year by CEO Monthly. So that's really, really cool. Congrats on that. And also
FinTech CEO of the year. I've heard a few, it's just at one vertical, but thank you.
You're welcome. And then also the other thing was the crowdfund that we launched this week, which is cool to see the reaction so far. But if you just want to give your thoughts, it seems like a very big week for Prospero in the end of July here.
Yeah, I gotta say, I mean, the crowdfund has been, really exciting. We've gotten to, we have, in the first few days, done very well. But I gotta say, I'm a little disappointed in the newsletter readers. We haven't, versus where we were when it was just people on Republic and some private like that I sent it out to. We haven't gotten that many additions today from the newsletter people. So if you like Prospero, if you believe in what you're doing, I don't know why you wouldn't want to own a piece of the company.
Can you explain on stream? Maybe it'll help people, because I saw that there's like different tiers people can invest, and there's some different additional things they can get when they invest more. So maybe it'd be helpful if we went through some of them right now.
Yeah, so the minimum investment is $250, and that's just you get equity, right? But the perks start a little higher at $300, and at $300 we're about to release our alerts. You get 4 months free of the alerts if you get 300, and then as you go up, you get more free alerts. You start to get perks like Prospero, like Jully, higher. As you get higher, I'm offering private tutoring sessions. I mean, I do that one off a lot, but this would be kind of like a more dedicated financial planning for people as you kind of get into those higher echelons. But yeah, I mean, at the very least, even if you're getting that 4 months free at the $300 level, that product is going to be $50 a month. So you're pretty much getting alerts or company equity, largely for free, depending on how you look at it. You get both. So, I mean, I think we actually limited that to only 100 of those that people can get. So yeah, I mean, I think, it would seem like a no-brainer to me if you have the signals, you believe in what we're doing. Like, our user growth numbers have been great since we've expanded our marketing campaign. So yeah, any questions? Happy to answer them.
Yeah, all really cool stuff there. Yeah, so if anybody watching has questions, definitely ask, because it'd be great to address them now when it's just getting kicked off. But back to the stock market topic. So some data around the U.S. economy was released. So it grew 3% in Q2. Exports declined at 1.8%, but imports declined at 30.3%. Do you expect that kind of drop in imports to continue? This August 1st date is now, just days away, or actually tomorrow, I think. So do you think that's going to continue, where we're going to see like around that 30% level continuing quarter after quarter? And how will that affect the market, or will it, if we do continue to see that?
Yeah, I mean, of course, we're gonna, you raise taxes on imports basically, and I think what some people don't understand is it's not just like, oh, people ship things to America, right? They ship things to America because they're being bought at certain prices. Like, all of a sudden, if they're being taxed, by 15, 20%, maybe more, all of a sudden you might say, hey, I can do better. I can get, closer, maybe I don't get the same prices as I did in America, but, maybe instead of 15% higher, like I could get, 10% less than I used to, instead of 15% less if I ship them to some other country. So, I mean, I think we're definitely gonna see some of that. And like, what happens is really complicated, right? There are goods that there's substitutes for. You'll just buy something else. Maybe it's a different import. Maybe it's something, we're not that great at manufacturing. So I don't think it's really like, oh, we're not importing, so there's something else available. That doesn't necessarily work across the board. But it really depends on the good, how easily you could be, you could get something else. Like a car, for example, is like, oh, you can buy an American car if there's just not enough, foreign cars. But that's not a really good example, because there's probably going to be an adequate number of foreign cars. But let me think of a good example of, sweets. Like, there's I think, like, I think like Lindor is like Swiss or whatever. So like, let's say they're like, we could send these, we can send, 50% less of the Lindor truffles to the U.S. That's probably an example of, you might not have another like, Lindor truffle, or you might not have, what's those other ones like Toblerone or something like that. But, there's other products that you buy. There's other chocolate products, maybe not the exact same one. So I think that's a good example of, you really don't know how it's going to help economically. If it leads to more U.S. goods being bought, like, that is probably a good thing economically. But if, for example, distributors that depend on kind of like, importing a wider array of products, and then their sales are down because, they're not getting, as much purchasing as they did before, if people just aren't, spending as much money, which, consumer spending, there has been some, cracks in that, in all of this, and it could just be less spending, right? If everything, tariffs do make things more expensive. So especially for like a luxury good, it could just result in less of them being purchased, which doesn't really benefit anyone, especially like if it's a distributor that's selling it in America, because they're not going to be getting the same amount of dollars into their business as they did before.
So from what you just said, it would seem to me that of the four mega caps that are reporting, Meta, Microsoft, Apple, and Amazon would be the most affected by the headwinds you're describing. Maybe it's not even Amazon, though. Maybe it's like the individual sellers on their platform that will get hurt more. But what are your thoughts there? And then of the four companies, are you looking for anything specifically or paying attention to one of them more than any of the others? Which one are you most concerned about? How you feel about the big four reporting today and tomorrow?
What is it? Amazon, Meta?
So today is Meta and Microsoft. Tomorrow is Apple and Amazon.
It's the same thing with Google. I generally feel good about like Amazon, Microsoft. I generally feel good about cloud providers, right? I think cloud providers are at a really good space. And even if like you're an Amazon, right, and you're seeing some more softness, although they did have a good what is it, Prime Day, whatever. Probably in the order I probably feel strongest about Meta, then Amazon, then Microsoft, then Apple, who, there's sales concerns. As anyone knows this watches this stream, I have serious concerns about Apple. And Microsoft, even with positive cloud results, like I think some of the like their last earnings, I think they had an underwhelming response to. But yeah, I think Amazon and Meta, I think, are the ones I'm most confident in. Both of them, have a good history. And to your point about the tariffs, right? Like, yeah, it'll affect individual. Like at the end of the day, until people stop dropping Amazon, where you're starting to get like more, rumblings of that. I think people are, I don't think the wedding was a good look. And I do think that'll be an interesting thing. What I'd love to know is if Prime subscriptions are down or their pace grew slower in this quarter after the wedding than they have. Because I do think there was like a bubbling frustration with Bezos. And then when he stepped down, I think a lot of that, like I think people stopped talking about that and, kind of moved on to other things. Now I think this wedding has put things a lot more in that conversation. Again, but Amazon's Amazon. Like there's actually a reason that it's rarely in the Prospero portfolio, although sometimes it's just because it's rarely a good value in my estimation. It's just so often priced based on how excellent of a company, how good processes they have, how well they grow. But yeah, I think they could. I could easily see Meta, Amazon, Microsoft all having good earnings. Apple, not so much.
So swinging from one area of the market to the complete opposite, because the last stream we had last Wednesday, it was kind of the meme mania coming back around. A lot of short squeeze stocks happening. it seems to be cooling off now, especially after the FOMC meeting today. I see like RKT down a lot, QuantumScape down a lot. A lot of others have dropped already, like GoPro, Lucid, Open Door. Do you think that's behind us and we're not like we saw a quick burst of energy in those companies and that's all it's going to be? Or do you think this could be lingering around even though they're dropping now? I know we even had like the screener in Prospero for one day when it was like at its peak. Do you think we could get back to that level of excitement in any of those companies, or kind of behind us?
Yeah, I mean, I I I think it'll be back, right? I think it's like there was a book that I read growing up called like If You Give a Mouse a Cookie, like, and then basically the book was about like the mouse will want more if you give it that. And I feel like that's how I feel the short squeeze people are. If they get any kind of reception, any kind of results, more of them will come. It's just like the thing about retail is, unfortunately, a lot of retail is just looking to make a quick buck and the easiest way. And the short squeeze and the history of the short squeezes are the easiest way to explain. It's like, and a lot of these like short squeezes are recruiting people. And that's just something that isn't going away, partially because, unfortunately, the hedge funds are the people recruiting. And like, a lot of people say like Wall Street Bets got compromised. I've definitely, I talk about it again. A lot of these funds love to short stocks, amp up that thing. And as the borrow rate gets higher, they're sensing the social media. As they sense that, then they'll start buying, call options to really capitalize on it as they're shorting it. And then, they'll let it rip. They'll take off their shorts, let it rip, have retail pour in. There's a lot of institutions that absolutely love that trade. And that's the one thing that's just like, that's the one thing I caution people, where it's just like, do the short squeezes, don't do the short squeezes. But this idea that, short squeezes mean that institutions aren't making money is crazy, right? Because at the end of the day, unless you create a situation like GameStop where the swell is just so strong, institutions are just going to like be buying more like put options, and they're going to keep shorting, and they'll win. And like that's why we were right about CoreWeave, right? I looked at it at a zero net option sentiment, and we kept on our positions even though it went up. We got out of one, we got back in, but yeah, it's I was right, and I knew we were going to be right, because because ultimately I saw how much and how forceful the options bets were against it. I did promise Ori I would get to it this week, this stream, an answer about the newsletter, and I am a little bit. I think I'm definitely going to write this in the newsletter because I've lost a few paid subscribers today with all my activity. And I hate that there's confusion over this, but, there's a trading letter, and I think we do it here. That's pretty self-explanatory. The investing letter is, I think, where we get into some trouble. And, what we do in the investing letter is we make, some weeks we make very few moves. Some weeks, if things are changing a lot, we'll make a lot of moves. And some people don't consider that investing. But the reason we consider it investing is what we are trying to demonstrate is, sometimes you do have to move your portfolio. Sometimes you do have to change your risk levels to optimize your investment process the most, right? When we make moves, we actually explicitly say they're not meant to be followed. This is our process. And, there's some people that want us to make more moves. There's some people that want us to make less moves. We're trying to manage it on both sides because some people get that it's just ideas that we're presenting, and you can follow the ideas or not follow the ideas. But every time we have an idea, we want to put it out there. And the other thing is we're trying to maximize our returns, right? So if we think, we like AMD, for the next year, which we love AMD for the next year. But if we think we're seeing something that we think it could go down, 5-10% in the next week, we're going to get out and get in a better entry point. And we consider that to be efficient investing, right? Another thing that we do, sticking with the AMD example, that confuses some people is, sometimes everything will be great with AMD, but NVIDIA will just go higher than it in the signals, right? And we're basically saying we're dropping AMD, we're getting into NVIDIA because NVIDIA is better, right? In that case, especially, we love both long-term. You can pick whichever one you want. We are just saying when we drop AMD and we add NVIDIA that we like NVIDIA better, and we don't necessarily want to keep two chip stocks in our portfolio at a given time. And we think that's demonstrating the best way to optimize your portfolio, which is what we're here to do. Show people how to use signals to optimize your portfolio. We're not here to say do exactly what we do, right? That would be hard. And it wouldn't be what we teach. We actually teach people to make decisions because it makes sense to them, not because they're just following us, right? You could follow us. That's an option, in which case you shouldn't be pissed off that we're making a bunch of moves, because we promise hedge fund level intelligence, right? And that's what hedge funds do. Hedge funds are constantly optimizing. They're constantly trying to make their portfolio more efficient. And that's what we promise. That's what we teach. But it doesn't mean that you should follow everything that we do. It doesn't mean that at all. And like, to be specific about today, what we saw risk assets going up, right? So we added OCLO, we added like QBTS, we added ASTS, but then we didn't like that ASTS went from 82 net option sentiment to 74, which, by the way, is a big move in the hour since we entered it. And that's what we always advocate for. If you're a long-term holder of ASTS, that net option sentiment move shouldn't make a difference to you. It makes a difference to us because we could put something else in the portfolio that does have a positive move in that. And that's how we think about it. So we added 4 of these risk-based assets because it looked like people were risk on heading into FOMC. The rates were there. Those stocks all were making positive moves, right? Then people soured on it, right? We're not going to we got rid of all those stocks. We're not going to hold them just because, people are more comfortable with investing portfolios that, hold more stocks for longer. No, at the end of the day, we'd much rather have the stocks we already had. Hood, Palantir, that are just higher in the signals than all of them. IREN is another example, right? So we actually think that that's super, super important to make that distinction. And we're not going to coddle people and say, because it's more comfortable for you, we're going to hold all these stocks because we think they're going to be great long-term. And we do. We do like all those stocks long-term, the ones that we dropped. We just don't like them today and maybe not the rest of the week. And we'll have to see, how things move with risk assets. But we think that's way more important to teach. Anybody could be like, which, by the way, anyone could do, take all the stocks that are above 80 and upside breakout, hold them for a year, right? I would watch sector concentration, but when we back tested that, holding all of the 80 or above upside breakout stocks for a year from that moment, it outperformed the S&P 500 80% of the days that we tested in that back test. Great. So if you want some boring thing, right, do that. Hold all the stocks above 80. But we're here to teach, right? We're here to teach people how to become better and how to optimize that, right? And if I got up here every stream and was just like, okay, we just got everything above 80 in our portfolio, we're holding above 80 upside breakout above for the next year, that would be pretty boring. That would be a pretty boring newsletter. And the returns wouldn't be nearly, you don't beat the market by 80% by holding, a basket of stocks for a year, right? Could you beat it by 10%? Could you beat it by 20%? Absolutely, right? But we are trying to show people how to beat the market significantly.
That comes back to the time value of money conversation, which I think is one of the harder things to get for a lot of retail investors, even myself. But I saw Gilbert also commenting about since he has a high majority of his portfolio in Nvidia and Meta, that's why he doesn't buy every stock move that you make, since he's already has those high growth tech companies in the portfolio, and he learned that over time, watching the streams, probably being involved in the Prospero community.
Yeah, exactly. And maybe you want to pick up a thing that you like that we recommend here and there to expand your portfolio, right? But you're going to do the best when you stay in your comfort zone, right? You're like, my comfort zone is going to be very different than a lot of people's. But, why we're so active, right? Because there's some people that might buy just QBTS and then NVIDIA and Meta, right? There's some people that might buy just ASTS and those things, right? So, for us, it's important to say, like, okay, we are going to actively manage that. And the moment that we think it's on the downswing, like, really good example, we did get into QBTS when it was up, I think like 2% today, right? And we got out when it was down 1.6%. It's down 4.42% right now, right? We think that's a good service, telling people, like, sure, we added it today, right? But if you made the move when we did, you're saving yourself 3%. And by the way, we're going to be watching, just like we were today, looking for a good time to get back in that stock, a good time to get back in TSSI, which is another one that, I think has a lot of potential. But we're just managing our losses for now.
So I want to go dumpster diving today with you. I have a list of 5 stocks that are at or near 5-year lows. I want to know which one is your favorite on the list to be watching for a rebound, and which one is your least favorite. So the stocks are UNH, UPS, Enphase, Lululemon, and General Mills, all trading at or near 5-year lows. Which one could hit highs first, and which one is destined to continue downward?
5-year lows. I mean, I will tell you the ones. Wow, Lulu looks terrible. GM?
Not GM, GIS, General Mills.
Oh. Wow, they all look pretty bad. I mean, I think it's easy. Oh, Ori, I wanted to finish up one other thing. And on that I realized, it's like, but that's also what the paid subscription is for, right? It's not for you to have every idea. It's for you to understand when we're making moves and why, and if it aligns with what you're doing, because you get those in real time. Otherwise, you just see them later, right? And on a day like today, I would think, that's why I'm just like, the people that are unsubscribing must really not get it, right? Because on a day like today, it's when it's most valuable, right? If people started unloading their risk assets when I did, maybe not the exact same stocks, maybe they don't own them, but just trimming down their risk assets a little bit, they would be able to, like, at the very least, come by and buy them, buy them back cheaper tomorrow, or wait and see if this gets worse, which is what I'm going to do. I'm probably going to trim my other positions. I mean, UNH is probably the only one that looks like it's got any potential. Like, I like Enphase's business, but I hate anything to do with renewables in the Trump administration. Like, I think they just clawed back, like, the EPA's ability to enforce any, climate change activity, which is just like a lot of these businesses' growth were depending on subsidies, things like that. I would say an acknowledgement of climate change. So structurally, I mean, UNH has huge risks, but I think it's got by far the most potential. The rest of those businesses look bad. I mean, I would say they all look bad in the signals. I would say, like, Lululemon, I think when I look at that business, I think that has, like, the highest quality product and the best potential to come back. But I was looking at the signals. I don't like any of them. I think something to watch with Enphase, something to watch with Solar City is, like, if it does look like the regulatory environment is going to change, those are going to be great buys, right? But we're probably talking about betting on the next election, and I don't even want to think about what's going to happen there. Yeah.
Oh. Yeah, so we're getting close to the end of our time before model portfolio update, but one last thing, CoreWeave update, because we are at that level that you gave, just about that $100 level. So the short has done well. The signals were correct. CoreWeave has been dropping, but how are you feeling now? Are you feeling like you want to hold it still, or ready to trim profits from it now that we're at that $100 level that you mentioned a while back?
I don't know. That's a good question. I think with the downward momentum, I think probably what I'll do is I'll keep riding it down. But if I see a good green day, like if I see a day where it's up like maybe more than 5%, probably getting the hell out of there.
Well,
all right, let's switch because
yep.
I got some moves in the other portfolio to make too.
Yep. So we'll do the switch over. Thank you, everybody, for tuning in today. All 2,325 of you. We've had a lot of people tuning in, so thank you. Be sure you're hitting that like button if you're watching on YouTube or Twitter. Sorry if you see my dog just walked up right next to me, so I'm giving her a little pet. What we're going to do now, if you're new, is we're going to do the model portfolio update. So George will make live moves in the portfolio, adds and drops, longs and shorts. So for those people who do enjoy the volume of stocks that are traded or invested in the model portfolio, you want to stick around because you're going to see them happen live and you get to see them for free, which is the best part. So everybody stick around with me. Let's take another look at the QQQ and SPY net option sentiment. See if anything has changed since the beginning of the stream today. Ooh, we do have a bit of a shift. So QQQ at similar levels at 54, but the SPY is back down to 13 now. So the lowly SPY, the lowly laggard of the year of 2025 is doing its SPY-like things, dropping back down. It'll be interesting to see. We have just about 13 minutes left in the trading day today to see if it's going to hit single digits or if it's going to end the day at these levels. So we'll have to keep our eyes on that going forward. And we are just moments away now from the major earnings afternoon we're about to have. The next 2 days are going to be market moving for sure. So it'll be interesting to see what George decides to do ahead of those. And how the QQQ net option sentiment reacts. If we have very bullish reactions or bearish this afternoon, it'll be sure to move the market. So it's going to be interesting.
All right, let's see how quick we can do this.
So the QQQ net option sentiment is staying up there at 54, but SPY is dropping back down now all the way to 13.
Oh, there we go.
And it was all the way up to 43 just a few days ago.
56 QQQ?
54 QQQ.
Those tech bulls just cannot be.
Yeah, if you're a tech bear, I don't know if you're making it through the year 2025.
I gotta share my screen. Hold on. I don't know what's going on with my rabbit today. She really didn't. Interesting. Small cap growth.
value is getting hammered. Good for our growth portfolio, but we still will trim some growth names.
I wonder if the materials is from Brazil. Damn, the market is really recovering. Maybe all my risk trimming was unnecessary. I'll close back up. Oh well, I can't get distracted. Oh, I gotta get. Let's get that. God, that always is annoying. Come on, that's an annoying time to be slow. Okay, how we doing? I suppose we can always. I really feel like I'm often doing this and then it doesn't. Okay. Yeah, 38 longs and 44 shorts. I guess I was well positioned for this. Did I get out of Ion this morning? I got all of these. Yeah, there's a weird thing with Wingstop.
Oh,
It's
you
very
know
weird.
what we didn't mention, but we probably should for some of our viewers, is that you just added a bunch of tickers that everybody wanted in Prospero, right? Recently?
What? Oh,
You just,
yeah,
yeah.
a bunch.
So if anybody's been asking for a ticker, it probably got added if it was in at least the Discord list. I know that.
Yeah, we at least tried. If it's not in there, there's probably some issue with it. Well, I don't think I can. I don't think I could be late to this hymns or this, but I am. I got rid of all my offload. That might have been hasty. What's going on with hymns? Is hymns like a short squeeze? I mean, I'll do it.
Maybe Wingstop had a Sydney Sweeney ad.
I don't feel great about it, but I'll do it. All right, what do we have? I think we added some of these already. Added what is this? CCK. I just added BC. AMT is a weird company. It goes back and forth between like good and our signals and bad. I have to remember to send that at 4. Okay, what am I getting out of? All right, RKT. I got out a lot of this stuff. Maybe I'm getting out of AMR. None of the rest of this stuff looks worth it to get out of. But I'll take a look at this. I think I'm staying in TSM. All right, I got out of those. I think it might be time to get out of LVRDK. Yeah. All right, let's send this. All right, let's look at LVRDK. Yeah, 16 in option sentiment. It is time to get out of it. All right, but we want one replacement. Let's see. Oh yeah, let's look at American Tower. I think we promised someone we would show our setup. Ooh. Yeah, let's definitely get into American Tower. Sure. Webull has been really glitchy today. All right. We are. All right. That was a crazy day. Any last questions before we sign off?
Going once, going twice. I don't see
All
anything
right.
in the chat.
Thank you.
Well, the fun is just beginning. We have some great earnings coming up. So good luck, everybody, if you're a shareholder. And we will see you all at our normal time, Monday, 11 a.m. Thank you, everybody. Thank you, George.